Ladies and gentlemen, we have breaking news to go over here in this video in regards to China and rare earth metals. Now, there's something big specifically with semiconductors that I think is coming soon that is going to push this market to new all-time highs. Hear me out on this one. I think it makes a lot of sense. But with that said, there was a lot of other headlines and news today, including non-farm payrolls that we must get into. And what you're looking at here is this far left column. This is the volume column. Volumes are very high today in Nvidia options. You have 16,537 for volume at the 142 strike, 18,000 at the 143, 10,000 at the 144, 24,000 at the 145, 21,000 here, almost 8,000 here, 7,000 here, even further out the money like the 150 strike, which would be an all-time high. By the way, this is the expiration for next week, has over 12,000 for volume. There's over 16,000 for volume at the 157.50 strike. There seems to be quite a bit of activity for next week's options expiration. Now, if you look at open interest, same's true here. At the 150 strike, you have 57,000, 25,000 at the 155, and another 25,000 at the 160. The 162.50 has 18,000, 145 has 39,000. So you should look at these numbers for yourself. But to me, this seems like very elevated option activity right at a moment when Nvidia is sitting at what could be a breakout to, again, new highs. That's important, okay? Now, China grants an export license to rare earth suppliers of the top 3 U.S. automakers. So this is something I've talked about on the channel. I think it's very simple. China has 90% of the rare earths, okay? And we have the best semiconductors in the world. That's the trade-off. You get rare earths, China gets semiconductors. I think at any moment, there's going to be some loosening of the restrictions on Nvidia and selling in China. And I think that is going to be a very positive catalyst for AI stocks. Could be one reason why AI stocks are actually doing so well today. These export licenses from to U.S. automakers are valid for 6 months. Now, Donald Trump today says he spoke with South Korea's new president, Lee. And South Korea's President Lee and Trump agreed to resolve tariff talks in a swift manner. EU's trade chief Sefcovic says, quote, following a constructive, productive meeting in Paris with the U.S. Trade Representative Greer, I held another call with U.S. Commerce Secretary Lutnick to advance our work towards deeper cooperation across several strategic sectors. We'll continue our regular stock take to stay on track. Mexico's President Sheinbaum says that she estimates fentanyl trafficked from Mexico to the U.S. has fallen around 40% since Trump took office. China's foreign minister welcomes French representatives to attend an AI conference in Shanghai. Apparently, China's foreign minister held a call with their French counterpart, and both sides reached a consensus on solving trade economic issues through dialogue. But here's where things get a little weird. China's foreign minister, quote, hopes France sticks to the correct position and opposes NATO interference in Asia-Pacific affairs. Doesn't sound great for America's stance. Donald Trump invited the South Korean President Lee to the U.S. for a summit. Now, Donald Trump again today says that Jerome Powell should cut interest rates. Now, China's foreign minister says that the Taiwan issue is fundamentally different from the Ukraine issue. Mexico's economy minister Ebrard says that he held a cordial conversation with U.S. Trade Representative Greer. Johnson on the Musk-Trump fallout says, quote, I hope they reconcile. I believe in redemption. Donald Trump says great job numbers. Stock market up big. And that's somewhat true. The non-farm payrolls today came in at 139,000. I mean, that's not great, but you did beat the estimated 130,000. And right now, anything that shows we're not going into a recession is going to be seen as positive. And I think, again, that's another reason why you're getting a little bit more of a risk on in markets. If that jobs number would have came in bad today, you definitely would have seen a larger sell-off. Now, the unemployment rate also contributes to that. It came in at 4.2%. That was in line with estimates and no change from last month. So that's definitely a good sign as well. Average hourly earnings month over month came in at 0.4%, higher than the estimated 0.3%. Average hourly earnings year over year came in at 3.9%. The estimate was 3.7%. Participation rate 62.4%. Which was actually lower than the estimated 62.6%. And average weekly hours came in at 34.3, coming in line with the estimate and the same as last month. The percent of stocks trading above their 50-day moving average today coming in at 73.5%. Definitely here getting to the higher side over the past, 5 years or so, 4 years. You've hit about 84%, 85%. That tends to be the peak of market rally. So you still have quite a bit, to go to the upside before you're getting towards like historically peaked out markets. And it's not that markets themselves would necessarily have to peak, just you probably wouldn't see the correlation continue. Right now, on good days, a lot of stocks are going up. And that's really what this is telling you. Okay, you may see maybe Mag 7 start to outperform a little bit more, or the rest of the markets, certain areas start to do a little bit better than others. That's what I think this would indicate if we go higher from here, that maybe the breadth starts to diverge a little bit. The CNN Fear and Greed Index today is coming in at 62. Yesterday, it was at 58. That is in greed and almost halfway in the middle of greed. Market momentum is fear. Stock price strength is greed. Stock price breadth, extreme greed. Put and call options, neutral. Market volatility is neutral. Safe haven demand, extreme greed. And junk bond demand, currently in greed. The AI investor sentiment survey that came out yesterday, if you missed it, was largely in line with the one we had last week. Okay, bullish investors dropped about 0.2%. Neutral investors rose from 25.2% to 25.9%, and bearish investors fell from 41.9% to 41.4%. So bullish investors and bearish investors fell last week, which doesn't happen all the time. And neutral investors were the only category that actually rose. Still, you're about 9% more bearish than bullish. Like in a bull market, you're gonna have like a 20% difference, right? You're going to have bullish investors at like 50% and bearish at like 30%, or maybe 25%, 20%. So you are far from people actually being bullish on this market, which, as you've heard before, stocks, they need to climb a wall of worry. The more problems, the better. Because as you solve problems, as problems are not as bad as feared, that gives you upside in stocks. Go ahead and wrap up this video. I do want to share this clip with you from CNBC and Dan Niles. He says he's cautious and expects a downturn later this year. Now, I'm very bullish. I expect markets are going to be up probably 20% here into year end. So, anyone that challenges that, I think, is important to pay attention to.
Good to see you too, Carl.
I got some of your thoughts in advance. It does sound like you think this 20% rally from the April lows can continue, yeah?
Yeah, I mean, I think in the short term, I don't have a super strong opinion, but I think it can continue. I think we could get to new all-time record highs. But remember, the reason I believe that is I believe demand is being pulled forward. If you're a rational consumer, you're buying things like smartphones, autos, PCs, because prices are going up. You've been told that as you get towards the holiday season. And if you're a corporation, just like Apple airlifted 600 tons of iPhones before the tariffs kicked in, you're doing that as well. And you saw that in the 41% growth in imports in Q1. And remember, the US is 25% of global GDP. So that distorts numbers all around the globe. But if you're buying a car, smartphone, PC in advance, you're not going to be buying it during the holidays. So as we approach Thanksgiving, that's when I think you have to get very worried that much like you saw earnings come in better than most expected in Q1, I think you're going to see earnings come in worse than expected in Q4 because of that pull forward.
Right. I'm glad you brought up cars because we did get a couple of strong months of what we think was a pull forward in demand on auto sales, but then we just got our worst month-on-month decline in 5 years. I mean, isn't that payback already beginning?
That's the one thing and why I don't have a strong opinion right here because I thought that would continue. And you are, to your point, Carl, you're starting to see some things get a little bit squishier. So it comes down to how much do people want to just sort of ignore that and say, hey, you know what, we got a great payroll number though, right? And so the market's up off of that. Market seems to be trying to ignore 4.5% on the 10-year, 5% on the 30-year. And the fact that the dollar's dropped, people are like, well, ignore that because that's going to help corporate earnings, right, for companies that export. It's an interesting balancing act, and that's why for me, with the market up 20% off of its lows after being negative entering the year, bullish, I think on your program on April 7th, thinking there would be a short-term bounce, I'm now, again, sort of going, all right, time to raise more cash, but, I have like one short on in terms of stocks and just like kind of play for a bounce to continue, but the further we get into the year, get a lot more cautious and expect another big downdraft.
I think that in principle makes sense what he said, but in logical kind of how the consumer behaves, it doesn't. People just buy shit, okay? People spend all of their money. Me personally, the only thing I've heard people talk about buying sooner rather than later is a car. And it was only one person that said, hey, that asked me, should I buy a car before the tariffs kick in and prices go up? It was actually my mom, to be honest. Well, maybe, you never know what's going to happen. Like, there's not a clear answer there. Now, I don't think anyone is talking about tariffs at all, okay? Nobody's rushing out to go buy things in mass before the tariffs kick in. Consumers just don't think that way. This just is what it is. So I don't think you're going to get this big plummeting or drop off of consumer demand in the second half of this year. If anything, I think it may actually pick up consumer demand, especially if interest rates come down, if we don't get this inflation that the Fed is so worried about. So let me know your thoughts down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day and weekend. I will see you in the next one.